Good evening and welcome to this week's Elliott Wave Forex Market Analysis. Hope you guys are having a great Sunday and you had a profitable week last week. We got really paid with the pound pairs. So I'm gonna start with a bit of a recap. But before we we start with a recap. So on this video that you're watching right now, that's gonna be available on YouTube. Just watch out at the bottom and the description. Every chart that we're going to go through is going to be time stamped, so which means the euro US dollar will be indicated as to which time it actually starts. Pound JPY, pound US dollar, every pair is going to be time stamped so that you can navigate around easily to only the charts that you're looking for. I know not everybody is looking for all the charts, so if you're just like the cryptocurrencies, you can just toggle around to Bitcoin, Litecoin, Ethereum, and all that. So it's going to be nicely time stamped, so you can easily navigate. But that will be done as soon as the video is edited. So look out for that as soon as the video is edited. Right, so welcome again. So let's start with the business of the day. So I wanted to start with a bit of a recap of how the week has been in the last week and some of the things that we've been looking at. So I'm going to start with the big news of the week, which was the pound pairs. So I'm going to show you how we traded the pound pairs. So it's important to understand how to trade, whether there is news events or not. And we always use our Elliott Wave strategy to focus the news. So this is the chart of pound US dollar 240. So this chart, I don't know if you can see the date. So these charts were posted on the 8th of February. This was the day before the Bank of England interest rate decision. So I want to show you how we trade the charts even when the news are happening, and how we don't specifically look at what the outcomes of the news will be, but what the chart tells us ahead of the news. So let's look at a few pound pairs that we were looking at before the BOE interest rate announcement and that big pound fall. So this is where we were with the pound. We had this big impulsive move to the upside. This is the chart that's posted in our live group, in our premium group, by the way. So this was the big move. This is a big impulsive move that we had, and we had this 1, 2, 3 here. So as you can see here, this structure was clearly missing. It was not complete. So what I said to the guys, we also had a video the day before this. This was a few hours before the announcement, about 4 hours before the announcement. So we said, we know that the pound is going to get a move up first. Okay. Obviously, I was looking for it to come to this level, but it eventually came to this level, which makes it an expanding flat. So we said we are not interested in this move. And that move was 200 pips. And I'm sure some of the guys were worried that we let a 200 pip move go. But I was not interested in this move because the structure was telling me that we are going down. So we got that 200 pip move, it went up, but then after the 200 pip move, we got the 200 pip move to the downside where we were looking for, which we sold as soon as we started seeing signs of reversal. This thing dropped 200 pips. After that, it corrected and it dropped a further 200 pips, which meant we got over 400 pips on the pound pair. We missed the 200 pips, fine, but we got 200 pips to the direction that we were forecasting. Okay, those aggressive traders would have taken this move, but we were not interested. We knew that it was going to spike up, and I'm going to show you where we talked about it spiking up before it comes down. So this was pound US dollar. I mean, I don't have to show you the picture after, because you guys know what happened after that. After that, you had this big fall here, 400 pips per downside. So that was pound. We were looking for down upside first before we go down. This one was pound AUD. If you remember all the webinars that we've been looking at pound AUD, we were looking for it to come and take the top here. So as you can see here, we wanted this move here as well. This was another 200 pip move to the upside. Actually, this one came and tagged the top here as we've been analyzing. Because you had this impulsive move, you had 1, 2, 3, right? And then after that, we wanted this to come down to give us this regular flat. So you can see it just kissed here exactly. If you look at your chart, it kissed here exactly and then came down. So all those pips we forecasted beforehand. Did we know what the interest rate announcement was going to be? Did we know whether they were going to hike or not? We didn't know, but we knew what the chart was telling us. It was telling us upside before we go down. This was pound CAD. Pound CAD was actually perfect because you could see here you had an impulsive move down. We had 1, 2. We wanted it to come, take the top before coming down. And it did exactly that. Exactly that. Even with the news, why would it do that with this news events like that? It turned here. We're gonna go back to the charts of the pound charts just now. Why would it just kiss here and reverse here? And look what happens now. We had this move now. This is the 400 pip move that we got on the CAD as well. Actually, it's not complete as yet. Where we are right now with the CAD, we are here. So we want the CAD to come complete, to come to this level. So the pound CAD may come to this level and reverse. All right, so that was pound CAD. Was actually perfect, this one. Following the analysis, nothing changes. This is pound Swiss, a bit of a move up before the drop. Similar, same thing. All of them doing the same thing. What else? Pound New Zealand. There's pound Swiss. Let's look for pound New Zealand. Pound New Zealand has got an interesting structure. It came here, tagged here, and then reversed. So we're gonna go to the pound New Zealand and see what the next move is from there, because it has made an interesting structure, something that I discussed on US dollar CAD, a similar structure, which we're gonna discuss again here. So this is how we trade the news. Or I don't like saying that we trade the news. We still we trade the charts. The only thing that I want the news to do is to push the price faster, so that I don't have to wait. I mean, you guys see me here week in and week out, following each and every pair, right? So obviously, while it just reduces the waiting time, because with the news, the price is gonna move faster. So it moves here, then we get the move, our moves faster. And I like the pound pairs because we get big moves every time. So I'm gonna show you that every single time we have the BOE announcement, we always have this kind of trades. So if you just go here, I'm going to show you a previous one that we did a couple of weeks, I think a couple of months back, the last BOE announcement. So this was that first pound move, GBPJPY move. You can see all of those 400 pips that we got there. So let me show you on the chart. Let's go back to the chart and show you how we always trade this news and how it always follows the charts. So the charts always lead. So let's look at this one. This was actually this was pound AUD. Okay, we can look at pound AUD as well. It's actually two of them. So pound AUD, this was the last BOE announcement. This was 3 days before, a week before actually. So a week before we bought it here based on this Gartley pattern as well. And then it moved here, corrected here. You can see here we had the move, and then we had that correction over here. The correction was happening at this was on the day of the announcement. The day of the announcement, we were here actually. You had the spike down, and then it just kept going after that. See, but we were already in the trade from the Gartley pattern. And you can see from there we got 1,400 pips, because after that it gave us a move up and a correction. See here, just so that one out. Gave us a move up and this big correction here for this move. This was all 1,400 pips. 1,400 pips. The last BOE announcement in September. This was in September, November. September, yes, that was the last one in September, as you can see clearly. That was not the only one. Pound JPY, exactly the same, on the same day. Another Gatli pattern with a wave count here. You can see the Gatli. We bought it here a couple of days before the announcement. I don't care whether there's going to be news or not. As long as I've set my entry and my stop, then I don't worry about anything. Look at this one. It just went. We bought it here. It went. Day before the announcement, we were here. It spikes down, and then it goes. 800 pips in 2 days. So that's how we trade this news. We just wanted to push the price faster. That's all we want, nothing more. All right, so we're gonna go back into the chat. So, but before getting into that, I was very impressed with one of our students, somebody who's only attended the course in November, and he was coming up with something like this. I want to show you the chart that he came up with and how he made so much money. So if you look at this picture here, well, this was taken from a phone, from his laptop. So this was EURJPY. If you remember EURJPY, I posted this trade here. This is the trade that we took last time. But as you can see here, he was already anticipating this downside move because he could see what the wave count was. It was 1, 2, 3. So he could already see that we're going to get a big move to the downside. And we're going to get to EURJPY and show you that there's a very interesting trade happening here. That was before. And if you look at the next one, after, look what happens. We were here, we got that trade, all those pips, look what happened. This guy only attended the course 3 months ago, and he's already trading like this. And he's not the only one. We've got a lot of guys, a couple of guys that have attended the course a couple of months back, and they're already coming up with amazing charts. Sometimes I just look at their charts, and so some of the stuff that I discuss here is what the guys are doing in our group. And those guys have only attended the course the course a couple of months back. So this course is really interesting. Guys are really getting their eyes opened with these courses because we're trading, like I say, I always say we trade differently. As much as we're trading Elliott Wave, our interpretation is a little different, or maybe a little is an understatement. It's quite different to what most people interpret the wave theory. So he's just one of the many guys that are doing well in our group. Okay, so just to talk about the course, we're currently running a course from last week. It's still continuing in the next week as well. So the next one is going to be on the 5th of March. And you don't have to wait for the 5th of March to register, because as soon as you register, I give you the previous course videos so that you can get yourself started. So even before March, you can already start learning. So this strategy is quite amazing, right? The course is only $500, and you stay with me for the next 2 years. And what I'm doing here, I do on a daily basis in our premium group. So daily we go through the charts, we go through the trades for the following day. So as I was speaking about the pound pairs, we discuss those pairs the night before during the mentorship session. We've got mentorship sessions, webinars every single day, Monday to Thursday, where we discuss all these charts. Okay, so let's go into the charts now. So if you're interested in the course, look out for my contact details at the end of the video and also on the description of the video. All right, so let's get into the charts. So Asim is asking how to handle spikes, because in most cases it stopped out on the open position. If you know where to put the stops, it won't spike, the spikes won't take you out. And that is something that we've got a strategy for. If you've seen the video last week, you've seen that the trades that we took, some of them had about a 50 pip stop for 200 pips, 300 pips, 50 pip stop for over 400 pips. So there is a strategy for it. There's something that we do in our group. Let's go Euro US dollar. I'm gonna go higher time frame first. You're welcome, Asim. All right. So now the question with the Euro US dollar is whether wave 5 is now completed. Let me switch everything off there. So you guys remember that we had this wave 3 here. This is wave 4 now. and this was a 1, 2, 3-way 4, which we followed from the start until it broke out for all these pips to the upside. So now we've got this move to the downside. We just need to know whether this is the move that really goes, and the market will give us an indication like this. I'm going to go to the lower time frame. So what is happening here is exactly the inverse of what is happening on the DXY as well. So if you're looking at the 4-hour chart, if you look at the 4-hour chart, we've got 1, 2, 3 here. We're getting this 1, 2, 3 here. I'm going to go into the 1 hour and just look at what is happening with this corrective structure. So every time I say a flag, it's just a way of saying a smaller time frame correction. If you go into the lower time frame correction, and if you downgrade your time frame, you would actually see a wave structure within this flag. So you can already see that we're getting a flag inside here, but I would prefer this one to be a little bit deeper like that. And that will make this 1, 2, 3. And then we get another Y to the downside. So the correction actually starts all the way to the downside. So let's go into the 1 hour time frame. And there's a very interesting structure within this flag. I'm going to go into that flag now. That's the 1 hour. A textbook example of a complex P correction. So you've got an impulse here. See, I'm going to use a different time frame color to indicate that here you had an impulse. That's the correction. Remember, that's your big impulse. Now you're getting a correction that starts with an impulse. I need to use a different color so that it can differentiate there. Let me use red. So we get 1, we get 2, we get 3. Look at that, perfect. After that, we're getting this yellow to the upside. So Euro US dollar, you may get in the next week this move to come retest here before we come down. So Euro may be still bearish in the next coming session. So we need to see what happens to this move. Short-term traders, you can take this one and move it to break even when it gets to this level. Because this is a simple 1, 2, 3 flat correction. Okay. All right, so looks quite interesting. So that's what Euro USD you should look out for. Euro US dollar, look out for this correction. It's in the 1 hour. If it reverses and it does this, you're going all the way down. Right. So let's do a bit of an education regarding flat corrections. I thought I was going to address this in the beginning, but I forgot. So somebody was telling me, was commenting on one of our videos. I just want to mention the name, so you can just go read up the comments in one of the videos if you're interested. He was saying that you can identify the flat, whether it's a zigzag or a flat, by the internal structure. So it's not necessarily correct that you can identify it by looking at the internal structure. And he was saying that David, it's you. I hope you don't mind mentioning your name. I think we had a constructive discussion in the group, on the description under my video. So I think we should have a look at it. So let's say you've got an impulse here, and your correction is a flat, right? So he was saying that you will know that it's a flat by the internal structure if it's a 3, 3, 3, and maybe 1, 2, 3, 4, 5, right? So I said the internal count may be misleading because it can be a flat. It can be a flat without this 3, 3, 5, but it can actually be 3, 3, 3s. So somebody else mentioned that they've actually discovered flat corrections that have got 3, 3, 3 structures. And I was looking at that and said, it's actually not your discovery, because what a 3-3 flat structure means is this. Okay, so I wanna explain why it is misleading to look at the internal structure. So what if you had this impulse? You had 1, 2, 3 correction. That is your zigzag ABC, right? Your zigzag is ABC, and then you get another 1, 2, 3 ABC, and then you had another 1, 2, 3 ABC. What is this structure when you look at it? This structure is a flat, right? It looks like a flat, but it's got 3, 3, 3s. But what is happening here is that your lower degrees are being built by zigzags. So this is not one flat correction, it's a combination. What you have here is this. Look. What you have here is this. You've got your first correction, which is a zigzag, 1. You've got your connector, which is an X. And you've got your last correction, which is another zigzag. So what this does, gives you a WXY structure. So the higher degree is a flat correction. Lower degrees, you've just got combinations of corrections. So if you're getting a flat correction that is a 3, 3, 3, it just simply means that you've got combinations of corrections. But what if now your last piece ends with an impulse? That is 1, 2, 3, 4, 5. What is it now? This is now your ABC. A single flat structure, ABC. You see, it is still a flat correction, but this one is not a combination. It's a single flat correction. And then after that, for both, you will expect the move to carry on there. So it doesn't really matter. It doesn't really matter what structure you have now. You just need to know which one it is. So I thought I should just explain that because somebody was commenting about it on the video, on the description of the videos, on the comment side. Sorry. I hope this this makes it clear. Right. So let's carry on with the rest of the charts. Here's the USD CAD, I'm looking for a downside. Let's go for hour. I showed you an interesting structure on CAD last time. You have this big move to the downside. We had this 1, 2, 3 here, and I mentioned that we have a truncated wave C. So you can see here, this was supposed to go, but it did not go past. See, so this was your A, this was your B, this was your C. And your C was truncated here, as you can see. Right, so now we had this move to the downside. So we're getting this upside here. We're getting this upside, which I think will come down to this level again. But we just need to keep an eye. You can see, already see that we've got this pattern here. So we need to see if we get an impulse down and a correction, and this may come down to this level. Why do I want it to come down to that level? Because that may give us an expanding flat for a move down to further come to this level, making this one a bigger flat correction like that before a bigger move down, if that happens. Okay, so that's what we're looking for here. We've got the move up. It doesn't mean anything at this stage. You need an impulse. You need an impulsive move down. So this move may be slow because it will be corrective. It will be corrective. So it may be something like this, giving you the structure, and this one will be impulsive. But we need to see how it goes in the next coming sessions. All right, so that's USD. That's what you need to look out for. If I go to the 1 hour, you'll see that we already have the impulse down with the news. The news gave us an impulse down, but look what it does first. It gives you the spike up. The spikes are part of the market price. The price has been here. So you consider this. So we've got the impulse, you're getting this correction. When this correction breaks to the downside, you're in the trade all the way down. So keep an eye on that one. Pound Chief. So Pound Chief is a little bit interesting because what we have here is 1, 2, 3. We're getting 1, 2. We're going to be anticipating a 3 here. If we break to the downside here, we're going to be coming down to this level. And that may give us this structure, maybe before they move to the downside. So then the trade to look out for here in the next week is the break of this corrective structure to the downside, as you can see here. So look out for this here. That's Pound Chief. Gold. So gold, I am going to look at gold. I'm going to do it's going to be chart of the week. Maybe Monday or maybe tomorrow or Wednesday, I'll do top-down analysis on gold and show you how this has been going with the structure for the last 7 months that we've been looking at it. So let me go to the daily first on gold. Spend a bit of time on this one. Let's switch everything off. So if you remember, gold, this was your impulse. This is your impulse coming from all the way down to the top of the swing. And this is what I was looking for on gold. I was looking at this. This is the start of the correction, 1. And this one is the lower degree, 1, 2, 3. And then we get this one here, 1, 2, 3. I thought it was going to push higher up to 376. If you remember, I've been looking for 376 as my target. It was $10 shy of that, but doesn't mean anything. It's okay. This is still a zigzag there. So the move that we will be looking for is this one here. Possibly we're going to be looking for a move like this one here to the downside, but that needs to be confirmed. So if this is our first impulsive move down, we need to get a correction. You see here, we had an impulse first, we got a correction here, and then we got this move down. So this piece could be this piece here. So we could be looking for that move, not in that color, in red, still in the red degree. Still in the red degree, we need a corrective structure there for a move to the downside on gold. So let's check the lower time frame. I'm gonna go to the 1 hour and just look at the last piece, which is this one here, and see what we're getting. So 2 things are happening here. This is the first down move on gold. So 1, 2, 3. Excuse me. It's clear. Just going square on my mouse here. 1, 2, 3. So what we need here is a 1, 2, 3. Okay, before we go down. But this may be even deeper than what it is now. It may be deeper than that before we start getting a move down. So now we have got what looks like a buy setup on the 1 hour. So you can see we've got an impulse in the correction. We're getting an impulse in the correction. This is your impulse. This is the correction here. So do that. This is your correction. You may be looking for this move up to this level. And that looks like it's 50% of this move. All right, but there's also something that looks like is apparent here. So we still have the impulse, but this may not be complete. If you look here, this is your first 1, 2, 3. This may be another 1, 2, 3 for another 1, 2, 3, making this a larger correction like this. So we need to see which one happens. We've got 2 alternatives. One where this is complete and then goes to this level, or whether it continues with this one, which is an impulse 1, 2, 3. Just show you that second option. As you can see here, it's an impulse, and then it's a 1, it's a 2, it's a 3, and that will be a nice regular flat. So either way, we'll trade this to the downside when it completes. All right. Right. So similar to Euro US dollar, we are still in this correction. You see, because gold and Euro US dollar are correlated. So we need to see what happens within this correction. So Euro is going sideways. Gold might do the same before we get a move down. All right. That's gold. Euro US dollar. AUD US dollar. Excuse me. So AUD US dollar, we had that big move from the swing low to the swing high here. So now we have a swing down. We're getting now a correction. Now the question is whether this correction is going to be deep enough. Whether we're getting 1, 2, 3 here before we move higher. So we're still on the 1 hour chart here. So let me clear this and just adjust this clearly. Maybe even remove this so we can have more space. Here you can see that we have an impulsive move up. And then we're starting to get this move here. So this move may do something like this for a move here, similar to gold, before we continue with the move lower. Right, so gold, Audi, Euro, looking bearish, but we may first get these moves to the upside first. Okay, so let's watch what happens with these corrections. New Zealand, US dollar, similar. Where's New Zealand? There we go, New Zealand. So if you look at New Zealand and Audi, you can see that New Zealand is ahead. New Zealand and Audi are also correlated, 1, 2. So New Zealand, Audi US dollar is here, busy with this correction. So this one has already made this move. So you'd expect that Audi will do that the same. You see here, we've got a move. Audi is still busy with this correction, but New Zealand has already done this move. So we'll anticipate that Audi will give us this move as well. Okay. Okay, so if I just go to Audi and show you the higher time frame, what we're looking for here. So I'm just showing the last pieces, but you don't understand what the whole structure is. Okay, so this is New Zealand. New Zealand, we've been looking at this as a 1, 2, 3 correction in there. 1, 2, 3, a regular flat like this. 1, 2, 3. So you've got your 1, 2, 3 waves over there. So this may be the move to the downside. So we just need to see if we get those corrections for a move down. And these moves will be big moves to the downside when they come. If this is the one that is gonna take us there. Similar to Audi, I don't think I've done a long-term chart on Audi. If you look at Audi, look at here. That is your impulse, first impulse. You had this 1, 2, 3 correction here. Now remember, these corrections are correcting only this impulse. 1, 2, 3. And then you get this move to the downside. Oh, not like that. This one here. And this red one is giving you a running flat before you get this move. So you see here, I've got an impulse, a running flat. That's your running flat, and then an impulse. What does this all give you? It gives you a zigzag in red, in yellow. And then if this is the move that is going, this is gonna be a big move to the downside on Audi. So which means that this correction will be over. We've been focusing this as a correction, but we could see that the sequence and the cycle was still not complete on this one. So this may be the big move to the downside. And it's correlating with what gold is doing. So we need to keep an eye what happens in the coming weeks with this smaller time frame correction. So whatever is happening in the lower time frame, we know that the overall move may be to the downside. If you look at the 4 hour, we've got the impulse, and then that correction that I was discussing just now, Audi. Look here, see here, that impulse. So this may be a 3-wave pullback, like that, before we get the move down. So if we get it here, we're gonna take the trade. All right. Somebody is asking if I can explain the fundamentals of my strategy. Now we cannot do it here. We only have 1 hour to do this over 30 pairs. So send me an email if you're interested in learning. Send me an email, then we can discuss. This is the Elliott Wave theory that we're looking at here. Right, so US dollars are go higher. So today I'm going to look at Euro as well, EURUSD, because there's a interesting structure happening. You can all see that you've got this swing high, swing low happening here, and then we've got this 1, 2, 3. So possibilities are this to give us another 1, 2, 3 there. And who knows, you may even got another one there. Right, so we need to see what happens when this one comes down to this level. Let me clear. This US dollars are. So we are in a big sideways correction here. You can see here, there's the first correction, second correction, and the other correction. After that, we may get this one. So this may drag on for the next coming week, but when it breaks out of here, we'll be selling US dollars. So let me just go zoom in into the structure again so we can look at it clearly. You can see that the first one is already completed. There's a 1, there's a 2, there's a 3. Now we're getting another one, which is this one. 1, 2, 3. This may be an X, and if it's not, then we will know. But this thing making flag like this, breaking out of this for a move down. So we'll keep an eye. We need to wait. So that's US dollars. If you look at euros as well, I don't really trade this one. I just use it as to support the analysis on other pairs. You've got 1, 2, 3. You've got 1, 2, 3. And now you're getting another 1, 2, 3 here. This may come back here for this move here. So you will have this, this, that. So this one is a little bit ahead. So this may give us direction in terms of what US dollars will do. So this will still be a big correction for a move down. All right. So let's see how it goes. So those are the US dollar, all the US dollar pairs. Let's go US dollar JPY. So US dollar JPY, I'm going to show you higher time frame bit. I'm going to spend about a few minutes extra on this one because there may be a very nice trade coming in the coming sessions on this one. If you remember how we've been looking at US dollars for the last 7 months, we've been going down, up, up and down with this correction for the last 7 months, and now this is very, very clear. Right, so if you remember, we had an impulsive move down. We had this 1, 2, 3. Now you had a regular flat in the middle. Initially, we thought this was the flat. Initially, we thought this was the flat here. We thought this was complete, but we can now see that this flat is actually something like this. Let me do it like this. Initially, this was what we thought it was going to do before it gives us a move down, similar to this one. But we can see that that flat continued like this. If you look at this, this is the 3 waves within the flat. That is 1, that is 1, 2, 3, a regular flat. All right, so 1, 2, 3, regular flat. What are we anticipating? We're anticipating that we're going to get this correction here before we come down. Okay? See, so what do we have here? We've got 1, 2, 3, 1, 2, 3. What are we anticipating? The Y move here. So we're looking for this to do this. Let's use a different color, pink. 1. My error is misbehaving there. We're looking for 1, 2, 3. So we may get a bit of a move to the downside. So my initial target from 7 months ago, from July last year, has always been 104. And it looks like we may be getting to that level. But we know that we're going down, but do we go down in a straight line? We don't go down in a straight line. So watch what's happening in the last piece here. Not the 1 minute, let's go 1 hour. The last piece is quite interesting. This is where we are now. This is where we are with US dollars. You see here, we've got an impulsive move down, up. We've got 3 waves in the middle. This is what we're anticipating. I'm anticipating a move higher before we come down. So this is where most people get it wrong. when you know where the direction of the market is, because you don't know that, you don't understand how waves move, you're just gonna sell. And if you sell it here, you're going to lose money, because this is gonna go up here, and you won't even know whether it's gonna come up to this level before it comes down, because that may be an expanding flat. You don't even know that this may come down here, come break there before it comes down. So that is how people lose money, because you will know the direction, but you don't know what the price does before it goes. So right now we've got an impulsive move down. If we get a flag here, this is the trade to the upside up to this level to come complete this 1, 2, 3 waves. I'm drawing so messy today. Let me clean it up a bit. Maybe use a different color there. Let's go zoom in and see what we're looking at. You can see that reversal there. We've got an impulse. You don't just buy because the market is going up. You wait for a correction. And by correction, I mean a corrective structure as per the Elliott Wave theory. You need to see which one forms within this flag. You can even go to the 15-minute chart to see which correction it will form here and when it's gonna end. That's what we do. So we will be targeting the 110.40 area in the next coming sessions. Let's see how it goes. That's US dollar JPY. So just back to our US dollar JPY gold correlation. Let's see what these are doing right now. So this golden US dollar JPY. And as far as correlation is concerned, so this is the chart that we've been looking at for the last couple of weeks. It's a wave count on gold and US dollar JPY. I actually hate using that term wave count because it misleads people. I think Elliott wave is all about wave counts, but it's not about wave counts. It's all about patterns. And to understand patterns, you know how to label. It comes second nature. All right, so this is how this is going at this stage. Gold, remember I said I want this correction here. This is the correction that we're looking for on gold before we get the move down, right? And then US dollar JPY, we want this correction here, but we want this correction here, and this may correlate with gold for a while. Remember what I said last time about correlation. Sometimes these pairs wait for each other, even if they are inversely correlated or directly correlated. Look what happened here. Gold had a strong move to the upside. But what happened to US dollar JPY? It waited for it. And I said when this happened, wait for a big move to the downside on US dollar JPY. This is what happened, because it did not, when this was going up, US dollar JPY was supposed to have that move, but it was missing. So that move was not there on US dollar JPY. We wanted it to come. So it came eventually, but it lagged. It came late. So similarly here, you may find that there's a bit of a correlation here for some time, and then this will adjust. So that's what we're looking for on this pairs. All right. That's US dollar JPY. Let's run through the yen pairs. EURJPY. I'm going to start with EURJPY. Very interesting. That's the one one of our students posted, the one that I showed in the beginning of the webinar. Let's go higher time frame and show you how interesting this one is. Let's go daily EURJPY. If you guys remember, I said I'm not selling US dollar JPY for the long term in a while. All I'm anticipating is a correction. So we get an impulse here, you get a 1, 2, 3. You get an impulse, you get a correction. Every time you get an impulse, you get a correction, and then you keep buying these corrections. If you remember this one, we forecasted this one. We forecasted this correction in here as well. And now look what we have here. We've got a beautiful expanding flat here. We get a big move to the downside last week, but now we've got a beautiful textbook expanding flat telling us we're still going to get a move higher. Okay, so my target on US dollar or EURJPY is still 150 first. All right, so if you watch previous videos, you'll see why I'm looking at 150 initially, but you don't just go buy and target 150 because the market, it's not going to go in a straight line, as I always say. It moves in waves. So you see here, we know where it's going, but look at this 200 pip, 300 pip drop here, 200 pip drop. 300 pips that we keep trading. So it's not going in a straight line. So that's why it is important to understand how this moves. Right, so what we have here, 4 hour, let's look at this corrective structure. And it's perfect, it's a perfect structure. So that's the one. We've got one, let's undo there. We've got one there, we've got 1, 2, 3. I'm gonna take this as a one structure. We've got 3 here. Internally here, you've got these 3 waves, 1, 2, 3. We got this move to the downside. As you saw one of the chart that I posted from one of our traders. We got this move, but now we are looking for a reversal. And look at this structure that we've been trading quite profitably recently, where you get an impulse and the chart and the price just slows down like this. We know when it does that, it is a move to the upside. So I'm going to put up my indicator because the MACDs, because we know that when that structure happens, it happens with strong divergence. Let's see if we do have that divergence. Let's see if we've got the divergence. Bring it up. There we go. We're on the 4 hour. Let's downgrade to the 1 hour time frame. As you can see there. So that structure is not going down. It's not coming down aggressively. It's not coming down strong. As you can see there. See there what is happening with the indicator. The indicator has already started the cycle up. The MACD has already started the cycle up. So we know at some point this will break to the upside and give us the upside move that we're looking for. So keep an eye on this one. So you don't just go and buy, you wait for it to give you a correction, and you need to understand when the correction is over and how to buy it. Use your own strategy. Right, so that's EURJPY, CHFJPY, also a very clear structure. If we go to the 4 hour time frame daily, last week on this pair, this is what we were looking for. We have 1, 2, 3, 4, 5. 1, 2, 3. Sorry, not 1, 2, 3, 4, 5. And then we're getting this one here. Let's use a different degree there. We're getting this one here. And then this was correcting like this, and we thought it was going to give us this one here before it goes. But it actually gives us an even clearer structure, which is this here. Let's do this green. 1, 2, 3. Look how it just kisses here. I said I'm going to do a webinar and show you which support levels, support and resistance levels work and which one don't. Because a lot of support and resistance traders are losing money because they don't know which levels are important, which ones are not. And that's why when we start the course, we teach you and unteach you the wrong application. So you see here now we've got a perfect flat correction coming to complete here. 1, 2, 3, and then we may get a move up. So Euro and CHF are correlated, so these moves we'll be expecting on both pairs. All right. New Zealand JPY. So this one, very, very interesting. This is one of those that I like, that needs a person to think here. So you've got a swing high, swing low, impulsive move to the upside like that. But after that, you don't get a correction. You get an impulsive move down. After that, you still don't get a correction. You get an impulsive move to the upside. Only then do you get a correction. And then now you're getting this move. Okay. Let me fix this a bit here. I need to use a different color for the red, for this one here. I'm going to use, which one do I use now? I'm going to use pink. So now you get a move to the downside like this, starting the correction. Now you're getting this one up and then this one up. Look at this here, 1, 2, 3. Don't you think we may get a 1, 2, 3 here? Come, take that top there. And then once that is done, This will complete this flat correction in the purple degree. So this may be the move that goes with all the yen pairs. This up move that we're looking for on USDJPY. This may go up with the rest of the yen pairs. All right. So after that, what do we anticipate? We anticipate that we're going to get a red. Do you see that the red is now 1, 2, 3? If you look carefully. And then after the red move is completing the green. Look how beautiful this is. We've now forecasted almost the next 6 months ahead on this pair. So what will you anticipate after that? You had the yellow initially. The yellow is being corrected by the green. Then we're going to get a move to the upside. So that's a swing high, swing low, A, B, C. Simple. Okay. Those who like putting in a lot of letters, A, B, C in green. I'm not going to go through the motions here. It's just too much work. A, B, C in red. Similarly to the purple. So that's how we're looking at this. So we're looking for this move. This is where we are today. We'll be looking for that move to come take that level. Very interesting stuff. CAD. CAD also interesting. 1, 2, 3. We're looking for possibly this for a move to the upside. AUDJPY. AUDJPY, same as CAD. As you can see, 1, 2, 3. Now we're getting this 1, 2, 3. We'll see whether we get a reversal here. Okay, keep an eye on that one. That's New Zealand CAD. I think that's all the yen pairs. We can now do all the pound pairs. I think we've already talked a bit about the pound pairs. We have the big moves to the downside. I think last week we discussed the structure that we were looking for on pound JPY. Discussed two alternatives, which were all saying the same thing. So this was the first one, looking at this as a leading diagonal in wave A, as you can see there. So now it pushed up here. We expect wave 5 of a diagonal to push up before it gets gives us a move down. So we may be getting, we're just waiting for a correction to get more entries here. We've been short since Thursday here. Remember, a diagonal is a motive wave, so we should be expecting this move to be corrective like that to the downside. So a big move to the downside on pound JPY. Let's keep an eye. So what you need to wait for in the next sessions is a correction there. So let's go to the lower time frame and see if what we're getting there. I think we ended the session on Friday with a reversal candle, but the reversal candle doesn't mean anything. What you have here is a 3-wave move to the downside. You will need another 3 waves to confirm that you're getting downside. Okay, so that's what you need to wait for. That is a correction here. Any correction that you get here is a move down. Only time that you're going to be getting a move to the upside is if this is doing a 1, 2, 3, a 1, 2, 3 impulse up. So if it makes this higher degree correction, then we're going to get a move up. If it makes a lower degree correction, then we're getting a move down. So you see, either way, the market will tell us which way it's going. We got 2 alternatives there. Pound US dollar. I showed you how we traded pound US dollar right from the beginning. Switch off everything there. What we have here is 1, 2, Shanghai. That's your Shanghai. 1, 2, 3. You get a correction there. That's the correction that we forecasted before the announcement of the interest rate announcement. We were here. We wanted to get a move up. It went 200 pips up. We let it go, but we waited for this move, the 200 pips to the downside. This is where we are now. We need to see if we get a correction similar to pound JPY. If we get a correction, then we are still selling the pound long term. Please look out for the pound US dollar trade of the week that I did a couple of weeks back. I said we are expecting a 3,000 pip move to the downside. obviously not in a straight line, in the next year on pound US dollar. Pound chief, all the same. You got 3-wave move and a correction. So the only difference with this one, between this one and pound US dollar, is that its correction was a zigzag and sharp. You have here 1, 2, 3. That's 1, that's 2, that's 3. But its correction was sharp here, 1, 2, 3. So we got this 200 correction, 200 pips. So we need to see if we're still getting continuation. We need a corrective structure that is in the same degree as this impulse. Then we'll sell it more. All right. That's pound chief, pound CAD. Pound CAD is the only one that may still have a move to the upside, and that will be possibly because of the CAD that is on the quote there. So here we've got a move. We've got a 1, 2, 3 there. We got impulse down. That started the correction. We got a 1, 2, 3 there. Now we're getting this move. So this, even if we don't get this correction, this may just continue without the correction. Come tag here for a move up, because that will be your flat correction. Why do we want it to still go up? Because it's still got an incomplete cycle here. We still want it to come tag this level at least, and that is not a support and resistance level. It is a level that completes the pattern. Okay, that's pound CAD. Pound AUD. Pound AUD expecting a move down here because we have a swing high there, impulse down, 1, 2, 3, takes the top. Now we're getting a move down. If we get a correction here, lower time frame correction, this may be an impulsive move for a flat. So this is what you will get here, possibly to this level first. If it does that, then that means that we still have a move up. But firstly, we're looking for the move down. So look for corrections in the pound pairs, lower time frame for further move to the downside. Don't just rush into selling before you get confirmations. That's pound AUD, pound New Zealand. So pound New Zealand has made an interesting structure. If you remember what I said on pound US dollar CAD, a truncated C wave impulse. You have 1 here. You're anticipating that you're going to have 1, 2, 3. And then this will go. So when it is truncated, it does not go beyond the A wave. It does not go beyond the A wave. When you see there, we've got A, you've got a B. Second time that we find this structure again on a different pair. So now we are on the downside. We need to see what we get here. So we may be getting another 1, 2, 3 to this level. This may come up, come down. So this for the next couple of months, obviously, but we're not looking for this. We don't have enough information to forecast this, but we already look, we know when we forecast, that's what we're going to be looking for. The smaller time frame, as we go, the market certificate will be giving us direction. So for now, look for these flags to at least come test this level. And pound New Zealand. All right, so I think that's all the pound pairs. Pound CAD. Pound CAD, if you remember, I've been bullish pound CAD for some time. Bought it here. It's not pound CAD, Euro CAD. And this is the reason why we're looking bullish on the Euro CAD. It's daily. Because we have this 1, 2, 3 here. 1, 2, 3. We want this to come tag here. If it does, then that will be a big expanding flat. We're going to come down with a big move here. And this move is not going to be slow like these ones. You can see these ones are very slow. I don't like trading this move. The moves that I like trading is these fast ones here. So this may be a big move to the downside. So here it's crawling slowly, keeps correcting, and we keep buying. Keeps correcting and we keep buying. So if we go to the 1 hour time frame, let's see what it's doing. You can see here that we have this 1, 2, 3. This is also a 1, 2, 3, by the way, even though it's got a spike. This may do this and carry on with that move. But for now, until it takes the top and give us an indication of downside, we're just gonna keep with the bullish bias until then. All right, so bought here, got this move, but it's not going well. We had this nice impulse here, right? Now there's correction here. Let's see how it goes from there. All right, so that's pound CAD, pound New Zealand. Pound New Zealand, I need to go to the 4 hour here. I showed you that we were in the trade last week on pound New Zealand. And this is what it looks like at this stage. 1, 2, 3. We're getting this correction here. That may give us another move like this. Okay, before we come down. So let me show you why this is a correction. This is a correction because this is your move down. And this is what your correction is starting to do now. 1, 2. It doesn't look like it will come take this top at this stage. But whatever happens, if it breaks out of the correction before it takes the top, then it may just give us another zigzag like this, 1, 2, 3. But this structure here is showing us a regular flat after a 3-wave move. Here, that's the structure we're looking for. And this one is quite interesting here because here you get an impulse. You get an impulse. Only after that one, you get a correction. So this may give you an impulse first and another move. So this may be deeper and sideways. If it does that, then it's telling us that we're gonna take the top. So you see, the market always tells us. We always know with almost certainty that the direction of the market. So that's Euro New Zealand, Euro AUD. So Euro AUD, you all know that we bought Euro AUD here and we've got all of this move and now it is correcting again. So we've got one impulse, 1, 2, 3 impulse. We may get further move to the upside here. 1, 2, 3. So look out for reversal here. Look out for reversal for further move to the upside. Okay. So another possibility here for Euro AUD, remember, see here we've got 1, 2, 3, we've got 1, 2, 3 as well. So there's a possibility that this may come down here first before it goes up. So whatever happens here will give us an indication. If we get a reversal here and a flag there, then it's going to come down first. But if we don't, then it's just going to go up to that level. Okay. I think I showed you how Euro AUD played out the weekly analysis. So I'm actually looking for Euro AUD to eventually take this level. This level means nothing. It doesn't complete the structure, but this one is what we want to get to up here. Okay, and it may look ridiculous when you're doing the analysis because we are now at 156 and we're talking about 1,000 pips to the upside. So let me show you how that is nothing, because you can trade 2,000 pips with almost certainty, absolute certainty where the market is going to go. I know it may be boring for some of you that follow these webinars every day, so let's show those that have not seen it before how this can actually work. Here, there it is. So the 2,000 pips is not an impossibility here. It's not impossible. This is EURUSD. Move down, move up. Let's play it again. After that, that's a move up. You see target reached, get a correction, 1, 2, 3. You may be looking for this move here. Let's select that. You are possibly looking for that move. You see where we are going. That is the minimum that we may be looking for, up to that level. Okay, so let's keep an eye on this one. So whenever you get corrective structures like this, we'll be anticipating the move to the upside. All right, so that's EURUSD. I think that's all of the Euro pairs. EURJPY. EURJPY broke out of that diagonal. Now you just need to wait for correction for further move to the downside. Easy. All right, let's do silver before we do some CAD pairs. So silver is quite interesting. Right, I'm just going to look at the last piece here. We see that we've got an impulsive move to the upside. We've got 1, 2, 3. We wanted it to do 1, 2, 3 up to this level, but it did not get to that level. Instead here, we're reversing here. So silver may be giving us this move here for another one like that. Sideways correction, similar move to gold. Gold will be going down, silver will be maybe going down slowly like that. But we'll have to watch how this plays out, how this unfolds, because right now there isn't much enough information, because what you could most probably expect is a flag here to at least come take this level initially. Okay, because if that happens, then you may have this move, which is 1, 2, 3, 1, 2, 3, and then that will be your impulse. Let me undo that. That will be your impulse. 1, 2, 3, before you get an impulse up. So here, that's a couple of months ahead. Right now we're here, you need to look at for the move to the downside. Okay, so let's look at some CAD pairs. I'm going to look at New Zealand CAD. I'm going to show you the structure that we've been studying for the recently. Recently, we've been looking at this structure that we're now calling the V pattern. This structure is so perfect. We are making so much money out of it, and we're doing more research on it. Right, so we thought it was something that we discovered, and I said to my group here that actually we did not discover this structure. It's just part of the patterns that Elliott discovered. Because if you look at this one here, the structure works something like this: an impulse, pull back, and then it slows down. Sometimes you don't even get this pullback. Sometimes what it does, it's just this one, and then it just slows down like that. So we did not discover this pattern. It's just, it plays out in a way that you do not notice it. So we realized what it was actually. I'm going to show you how we traded this structure, because we've been doing a lot of work on it. So we have to give credit to Mr. Elliott. He did a lot of work. We cannot claim to be discovering patterns if they are not new or they have not been looked at before. So we've got an impulsive move down here. You see here we get a running flat. That's a running flat here. 1, 2, 3. It's a running flat. After that, you get another 1, 2, 3. This is nothing but an A, B, C move. You just don't see it because it is going on within the channel. So it's an impulse A, B, C. After that, we anticipate a move to the upside. So that's why you can see here we entered this trade here, and then we got this move. We got this move to the upside. See here. So when it gave us this move, we could see that we have 1, 2, 3. We've got 3 waves. So we anticipate 3 waves again. So we saw that we're going to get a correction there, and then we trade this last piece here. And I'm not just saying it, I'm going to show you how we traded that. Let's show you New Zealand CAD. You see here, we understood the structure, it was coming down. The correction, running flat, 1, 2, 3 waves. It starts the move up. We wanted it to correct and then go up. Let's see if we can go to the next one from here. You see here, it corrects. We got the first move up. We got the first move up. We wanted the correction here, and you will see now the last one when it completes. This is what happens when you study and you understand this properly. Learning the right way. Okay, that was another entry. I want to get the final one. Just go back there. See, that's when we had the correction. The final one, you just have to go look at your charts. You see that that played out perfectly. Okay, so that's how we trade these patterns. That's how we learn, spend time on them. Right, so let's go back to the chart. See, that is the move that we got. And when we're looking at this, we're not just looking at the next move, we're looking at the overall structure, because this overall structure is giving us 1, 2, 3, 1, 2, 3, impulse down. This has just given us a big expanding flat, or regular flat, if you want. Because you've got 3 waves, 1, 2, 3, A, B, C, A, B, C. So this is the stuff that we are busy with in our group. We trade like this. We understand. We trade with understanding. Okay, so that's the 1 hour. What are we anticipating? We've got this move up. Any corrective structure we're buying. I also did a chart, New Zealand CAD, long-term analysis on this one, showing you that we are long-term bullish. Let's look at that. Why are we bullish long-term? This is the daily. We are bullish long-term. Let's switch everything off there. We have 1, 2, 3 waves up. It's clear. 1, 2, 3 waves up. We're getting this correction. This is the correction that we forecasted and traded. And now we're going up. We've got to move up here on the lower time frame. We need to keep waiting for corrective structures to go. And this can be frustrating because it moves very slow, as you can see. But when every time it breaks out of correction, you get these strong moves, So you don't have to trade the whole swing at once. So you just do this. Whenever you get entries, you take, and then you take your profits, and then you wait for it to correct again. Because overall, this is going long-term, very bullish, thousands and thousands of pips to the upside. Okay, so that's New Zealand CAD. Maybe if we just look at AUDCAD. AUDCAD, you just need to see whether this is a 3-wave pullback or what it's going to do here. So we've got a 3-wave pullback and impulse down. We need to see what we get here. If it's a correction, then we're coming down here to retest this level. Another one up, then coming down. So we need to wait for the flag there. Right, so I'm not going to go through the rest of the CAD pairs. I'm going to go to oil. Oil, how perfect has our analysis been over the last couple of months on oil? So with oil, I said you've got an impulse and then you've got a 1, 2, 3 wave correction. And for the last couple of weeks, I don't know, over 8 weeks, I've been saying the same thing. Every time you get corrections on oil, you buy. Correction, buy, 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 buy. But my target was 168. You can see that we were $2 short, which is okay. So only from now, only here do we start looking for downside on oil. We've got an impulsive move down, so you need to wait for this. You are not late if you miss this piece. That's okay. Wait for correction, and then you keep selling it. And I'm not saying you're going to sell it all the way to this level, because that's what we always have been advising my traders not to do. You need to look at all the possible waves it could do before it goes down, if it's going down, because this could simply be a three-wave pullback, right? And a three-wave pullback and a move and a move like that, and then we continue with this move again to the upside, right? So you know what the next move is going to be. As it unfolds, it will tell you the overall direction. So now we're looking for this move after a correction. That's oil. The indices have been falling. So last week on the indices, there's S&P 500. So this is what I thought last week. Last week we were here, we had the 1, 2, 3 waves. I thought from the 3 waves, because that's what it has always been doing the last over the last couple of years. It always gives you a 3-wave pullback and then it goes. But right now, that's not what it did. It carried on with this move. And now we got this pullback here, and we may be getting further downside if it does not give us a expanding flat here first for it to give us this move. So long-term stocks indices may be bearish with this big correction here, and that correction you can see it will be 1, 2, 3, which is a simple sideways move. So those who like trading equities, this is an opportunity when you're getting a big correction, because this has just been on upside, or it has just been on an impulsive move without giving any correction. If you look at this, it hardly gives corrections like this. So if you trade stocks, this is an opportunity now with a drop. So we will still drop further before we resume the move higher. Similarly to DAX, we thought that we're going to get that. This is what I thought here. Well, this is what it looked like, 1, 2, 3, and I thought we're going to just continue like that. But it looks like this is the impulsive move down now. You can make it that expanding flat. We may get a move, not all the way down. The stocks are not going to crash. We're still going to get moves to the upside. All right, so let's look at Bitcoin. Bitcoin, I'm only going to look at Bitcoin when it breaks out of this corrective structure here. Let's switch this on. See my analysis there. I was anticipating this reversal from this blue box, which has happened, but it's not going with strong aggression there. So if it does not break here, I'm only going to be interested when it breaks out here and gives us a correction. Right now, we've got a 1, 2, 3-wave correction. Let's switch everything off there. We've got a 3-wave correction up to that level. And if this is going to be an impulsive move, if this is going to be a 1, 2, 3, 4, 5 move, 1, 2, 3, 4, 5. So this wave 3 needs to go to 2000, as unbelievable as that sounds. But we don't know if that is the count. For us to label this 1, 2, 3 will be only here at 2000. Only wave 3 will be at 2000. Then that will be 1, 2, because according to our rule, we want our wave 3 to be an extended 1,618, then 4, then 5. Then that will be still only B in a higher degree C. So we may still be getting a lot of correction within Bitcoin for the next couple of months, right? But if it breaks out here of this, we're buying first stop here. So that's the same for Litecoin. You can see it's exactly the same structure, same analysis. Ethereum, same. 1, 2, 3. It was gonna keep giving this 3-wave pullback to the downside. So as long as we are not out of this channel for upside, this correction is not over. Okay. That's Ethereum, Ripple. Let's look at Ripple. Ripple, 1, 2, 3, 1 pullback, 1, 2, 3. So we need to get another deeper one before we get down. Okay. So that's all I had for you this week. So good luck for the week ahead. If anybody has got any questions, I'm going to stop the recording now so that it doesn't become too long. Please like and subscribe onto the video so that you get notifications whenever I post charts. For example, there's charts of the week that I'll be doing on Mondays or Wednesdays. Still have to confirm. If you look at Ripple, actually may still do this. Give you a flat correction there for another move lower. All right, so like and subscribe. My contact details are at the end of the video. Thank you very much for joining me. Have a profitable week ahead. Cheers. Bye-bye.